Hey, hi everyone. Welcome to another video in our hedge fund series. So today we are going to discuss about how to build a hedge fund or a private equity fund and take it to the IPO. The entire step-by-step process we are going to discuss. And that is what is the agenda for today. And yeah, building a publicly traded hedge fund or private equity firm. What are the steps? The first thing we need to know is that this involves two layers. As I told yesterday, also hedge fund involves or private equity firm, even mutual fund involves two layers. One is the fund itself, okay, where the fund involves in doing some strategy and generating profits, right? And then there is a public holding or management company. So management company, which basically make earn some fees and can distribute these profits. So these are the two things that are there. One is the fund and the public holding or management company. So these two comprise in any firm, hedge fund, private equity firm, or even mutual fund also. Okay. So when we say that we are going public, we're only going public for the management company. Okay. That's what it means. What are the step by step process? So first step to do this is set up the core investment vehicle. So first we need to form a limited partnership. Okay. And this limited partnership, the general partner will be the fund manager, and limited partners will be high investors, basically family offices, high net worth individuals and institutions. So these will be limited partners. And then we need to register with the SEC in USA or SEBI in India, depending upon the jurisdiction. So if you're in US, you need to register with SEC, and if you're in India, you need to register with SEBI. The third thing that you need to do is then define the fund strategy. What strategy are you going to follow? Are you going to follow a quant strategy? Are you going to follow a long short equity strategy, a global macro strategy, private equity strategy, etc.? What is the strategy that you're going to follow? So that you have to define. The first step is forming a limited partnership, then register with SEBI or SEC, and then the fund strategy definition. So this is the step one, which is setting up the core investment vehicle. Then building a track record. So minimum 3 to 5 years of audited performance you need to have. So once you form all this, then in India at least 20 crores you need to have, and client size is 1 CR. So you need to form this first, and then you need to have 3 to 5 years of audited performance. So you need to have your fund performance audited for at least 3 to 5 years, and there should be strong and repeatable alpha. Okay, so the profits should be greater than certain high watermarks like the index, and it should be very strong and repeatable. Again, it should be consistent, uh, because the track record will be checked by the if you want further more partners which are big and you want to grow the fund, then the track record is what will help you. Okay. And yeah, low correlation to benchmarks, so it should be more better performing than the benchmarks, so that it appeals to investors. Okay. The third thing is creating a management company, a holding company. So this general partner forms a private management company, and this earns basically fees of 1 to 2% on the assets under management and performance fees of 20% of profits. And then hiring the analysts. So hedge fund has analysts, hedge fund analysts, developers. If some coding is there, algos are there, quant things have to be done, and support staff to do client management as well as sales and stuff, administration stuff, right? And yeah, so this will be either LLC or LLP. Okay, so these are the three process. One is basically setting up a core investment vehicle, then building a track record, then forming a management company, then going public. So going public, it's a GP IPO model, then taking the management company public. So you can only take the management company public, and this is what Blackstone has done, KKR has done, and Apollo has did. Yeah, investors basically in IPO do not invest in the fund directly; they buy equity in your management company. Okay, and what goes public is the recurring income fees will go public, and bonus profits will go public. The trade level strategies don't go public, client identities don't go public, and underlying portfolio doesn't go public. Okay. Disclosure requirements, you need to register this under, if you're in USA, Form S1 you need to have, or DRHP in India, and you must show the assets under management, the high level strategy, the fund performance summary only, and risk disclosures you need to have. No need to share the details of the trading models, the investor names, and exact trades or short positions. Okay. How we make money as a public fund manager? Management fees is 1 to 2% of annually on the assets under management. Performance fee is 10 to 20% of gains over a hurdle. Dividends from GP, so public entity earns revenue from above. Stock appreciation also. Then public investors value, growth, assets under management, and margins. Case studies for this are Blackstone. So it did an IPO in 2007. IPO raised to around $4 billion. It's publicly listed as asset management, not individual PE funds. Asset manager it is listed as. Okay. And revenue streams are fee income, performance income, and investment income. Current assets under management are 1.2 trillion. Client privacy is preserved. Strategy privacy is preserved. Okay. There's another option also, which is closed end, other than the GP IPO model, the closed end fund or SPAC, special purpose acquisition company model also is there. If you don't want your to go GP IPO, these other options are closed end fund, like Pershing Square has done. List a portfolio vehicle directly, long only or hybrid strategy, and transparent holdings. All the holdings will be transparent like mutual fund, but again, limited liquidity and secrecy. So yeah, so basically it's a closed end fund, it's not an open end fund. People can't take the money immediately. Okay. So that is the closed end fund. The other option you have special purpose acquisition company, raise money from IPO investors with a blank check to acquire a private company. Ackman's Pershing 20 Holdings has done this. Okay. Yeah, regulatory landscape in USA it is SEC, and you need to have a S1 registration and 13F filings. UK it is FCA and prospectus and LSE listing rules should be there. In India it is SEBI, DRHP, plus compliance as AAF or AMC. These are the steps to form the publicly listed hedge fund. Okay. Let's also go into further details. So, how to set up your hedge fund? So, as I told you, again, these are the same steps, but yeah, they're told in a different way, basically. So, again, you need to first define your. This is specific to hedge fund. Okay, setting up your hedge fund, basically. So, first you need to define your investment strategy, which is long short equity or your global macro, quant, or event driven. What is your strategy? Then you need to back test all those strategies, forward test all these quant models and the strategy thesis. Then you need to have those results, back test, forward test results, and develop risk management, drawdown limits, and performance metrics. So you will get all this if you back test and forward test. You will get all what is the risk, what is the drawdown limits and performance metrics. Everything you will get for that particular strategy. So once you have the investment strategy, you back tested it, forward tested it, and you have this the data, risk management, drawdown limits, and performance metrics for a hedge fund. Then you can form a general partnership, legal entities, a GP, general partnership. You control this, earn fees and profits. Then a fund, which is a limited partnership or a trust where client money is pooled. Administrator or custodian should be formed for operations and compliance. Okay. And forming this legal entity, so we're specifically talking about hedge fund here. The previous one was general model for both the private equity and hedge fund. So this is the specific hedge fund model. So you define your strategy: short, long short, global macro, quant, event driven, back tested it, forward tested the thesis, have this drawdown limits, performance metrics. Then you formed a GP and a fund and a administrator or a custodian. And the regions are USA, generally Delaware is the location selected for limited partnership LP plus GP LLC. UK it is legal setup is again LLP plus FCA registration. India is SEBI registered. It's alternative investment fund category 2 or 3. That's the legal setup in India. Offshore it is Cayman fund plus BVI GP for global investors. Okay, so these are the different legal setups for that hedge fund you can form. So in India, you need to form alternative investment fund category two or three. In US, it is Delaware limited partnership or general partnership LLC. Step three. So once you have the strategies back tested, forward tested, what is high level strategy, then you form a legal entity. Then you need to register and comply. So in USA, you need to register as an investment advisor, okay, SEC or state form ADV. In India, you need to apply for SEBI AF registration, category 3 for hedge fund like activity, and UK FCA registration as an alternative investment fund manager. So you need to register as an SEBI AF registration for category 3. Then build track record. Then you start with seed capital, own capital, as well as friends and family capital, and then you focus on net returns, low volatility, and alpha generation. Minimum 2 to 3 years of performance is ideal for credibility. Okay. So once you have this track record, then you can launch a public vehicle for scale and permanent capital. Two routes. One is public listing of the management company, which is GP IPO, like Blackstone has done, KKR and Apollo has done. So investors buy shares in your GP, general partner management company, and not the fund. This public vehicle earns a percentage of the management fees carried from your private hedge fund. Steps are: convert your GP into a C corp or equivalent, and hire bankers to underwrite the IPO. These are done by investment bankers, typically 100 million plus. They do that. They underwrite an IPO. Then file S1 in USA or DRHP in India. Go public on New York Stock Exchange, Nasdaq, or Bombay Stock Exchange. Advantages are: you full secrecy of clients and trades would be there. Permanent equity capital will be there, and scalable across fund types. It can be, you can use this to scale in hedge funds, private equity, uh, credit, as well as real estate funds. Option two you could do to go public is again closed end public fund. It's a listed investment trust, like Pershing Square Holdings has done. You launch a publicly listed investment vehicle fund, and that mirrors your private fund strategy. So it's a hedge fund strategy is mirrored by this publicly listed investment vehicle. An investor buys shares in this fund, not your company. Okay, so there they are buying the shares of the fund directly. So this is a closed end fund, not an open end fund. Okay. Steps of: form a new investment trust or vehicle, then seed it with your capital, yours or early limited partners capital. List it on then London Stock Exchange, Euronext, Bombay Stock Exchange, or NSE. File prospectus with local regulator FCA or SEBI. Disclosures: holdings often visible here. If you go for this way, then you need to tell the holdings. Usually long only positions you need to tell. Net asset value is published weekly or monthly, more transparent than a GP IPO. So this is more transparent. Okay. Hybrid model is also there. You can use both public GP like Blackstone and listed investment trust like PSH. Offers multiple funding paths. Okay, equity, capital, management, growth, and recurring fees. Revenue streams from public structure is basically management fees. There is a revenue stream for GPIPO model, performance fees, stock appreciation, and investment income, and flexibility control is high in the GPIPO model. In closed end fund model, management fees again, performance fees is built into NAV itself. Stock appreciation is NAV driven. Investment income, yes, it is, and flexibility control is medium here. Okay. Regulatory requirements: USA it is SEC, public regulator, and FINRA, and fund regulator is SEC, statewide, and Form ADV. UK FCA plus LSC, and AFMD and Companies Act, fund regulator. India SEBI plus BSC NSC are the listing public listing regulators. Fund regulators SEBI AF Cat 3. Offshore is Cayman plus LSC and CIMA plus local securities. Yeah, so these are the examples we can model after to go to IPO. Blackstone, a GP IPO, General Public IPO, Bill Ackman Pershing Square Closed End Fund. KKR is both GP IPO plus listed funds, and Brookfield Asset Management is GP IPO, REITs, and BDCs. So this is the structure used. Final recommendations it's providing. It's basically build a hedge fund legally and operationally. and deliver 2 to 3 years of audited alpha. Then you choose either one of the structure, GP or closed-end fund or SPAC. And if you want to scale the fund, then hire legal, banking, and compliance advisors and investment bankers to go public, and then launch a public vehicle and raise capital at scale, and then provide alpha. Then it will automatically grow. So that's it for today, guys. So that's the step-by-step process of forming a hedge fund. Thanks everyone for joining the call. Have a nice day. Bye.